Central Bank of Nigeria has reaffirmed that the ongoing recapitalization of commercial banks is central to achieving the federal government's $1 trillion economy goal by 2030. CBN Deputy Governor Philip Ikeazor said the policy aims to create banks that are not just bigger, but stronger, inclusive, and better governed. He noted that, like the 2005 reforms, the exercise would enhance stability, competitiveness, and capacity to finance large-scale projects. Industry leaders, including Professor Tayo Otunbanjo and ACAMB President Rashid Bolarinwa, urged banks to channel new capital into productive sectors and expand financial inclusion to strengthen economic growth and resilience. Mayowa Salami, Associate Director, Financial Service Advisor, Andersen Nigeria, joins me now. Good morning.
Good morning. Thank you for having me.
Yes, and we are nearing the bank recapitalization deadline. And would you say Nigeria's recapitalization policy primarily about financial stability, or is it a subtle push towards industry consolidation and efficiency?
All right, thanks. Thank you for that question. I think it's very important. So the recapitalization policy, it's more about financial stability. However, the efficiency and consolidation it's a welcome byproduct. If you look at what happened about 2 years ago in 2023, where the Naira suffered some devaluation, you could see that the capital base of Nigerian banks was significantly eroded. And there's a need for us to shore up the capital base of the bank. Like you mentioned during your introduction, there's a need for that to happen in order for the banks to be able to facilitate the economic growth, in order to achieve, the $1 trillion targets that we've set for ourselves. So for this to happen, we need to really shore up the capital base. So it's more about financial stability. Let the banks increase the capital base from what they have right now to the different tiers that has been provided, based on the CBN regulatory guidelines, so that they can have enough capital, to fund the real sector and also fund economic growth as well. So it's a drive towards, increasing the financial stability and not necessarily consolidation. However, consolidation is a welcome byproduct of this reform.
Byproduct, but the main aim is strengthen the economy, especially with the $1 trillion goal that we are setting. And obviously, This is also about credit and lending. And we've seen in times past, it's only specific sectors, lucrative sectors like the oil sector, that get most of this credit. And I mean, SMEs have a role to play. So how can we ensure what needs to be done so that we can ensure a spread with this and ensure that it's actually effective and we do achieve the goal of a $1 trillion economy? Because if you're only lending to particular sectors, the economy is not going to grow as projected.
I totally agree with that analysis. The real sector and the SMSE are the ones that are meant to, drive the growth of the sector, the real sector itself, and not just the big players in the oil and gas, as the case is. So recapitalization in itself, it's one policy, but there are a number of things that the government, the regulators need to do, both from a fiscal point of view and a regulatory point of view, in order to drive, growth itself. So, there could be sector-led initiatives, by the CBN to mandate, the financial institutions to provide credit to a certain limit or threshold in order to ensure there's, financial inclusion, from that particular sector in order to drive performance as well. So with that being said, we want to come back to what we have today, where we are just financing, probably larger corporates, but we need to expand the pool of those that have access to capital. So with the recapitalization program going on, hopefully, we've given ourselves a target of March 2026, right? And from that, we expect to see that majority of the banks should have achieved the new target. One, then two, they have sufficient capital. Then three, the regulator, that is CBN, now needs to work with these banks to ensure that we have good loan portfolio. So portfolio in the sense that you're not just, providing credit to a certain industry, but it's across, the different strata of the economy. Because at the end of the day, is a real sector, manufacturing, medium-scale enterprises, also trade and trade facilitation. These are the real drivers of growth of the economy, and these are the areas that require finance and credit in order to drive and achieve the $1 trillion economy that we want to achieve. So it's important that, it's not just only the recapitalization exercise, which just gives us access to capital, but we need to work and, direct those funds to where it's truly needed.
Right, indeed. And we have 4 months or so to go. Should we be counting December till the March 2026 deadline? On record, we have 11 banks, I believe, that have completed the exercise. How many more to go? Should we expect mergers, acquisitions? What are we seeing in the banking sector of late?
Yeah, good question. So I think based on the last MPC meeting, thereabouts, I think the CBN actually announced, 11 or 14, like you mentioned. And if I'm correct, about 33 banks that we have right now. So if you look at it, almost 50% of the banks have actually achieved the targets, but we still have a number of banks that need to do that. However, those banks that, have not met the targets are actually the smaller regional banks. So you see the big tier banks, tier 1, tier 2 banks have actually achieved the targets. And, they've explored a lot of capital market opportunities, rights issues, investments as the case is. Then some strategic investments have actually happened as well, both locally and internationally. So yes, as a date, we have about 50% compliance, which I don't think is a far cry. But I think what we need to do is the CBN really needs to work with the other smaller players, to really understand how they intend to meet the capital requirement that's been set for them. And I think the CBN has actually done a good job because they've set out multiple pathways, to achieving the target. So it's not necessarily have to be M&As. I think there's opportunity for you to downgrade your license if you think that you don't want to operate in that particular space anymore. The opportunity is there. And if you think that, yes, you've identified other strategic opportunities, then M&A is actually a welcome opportunity or approach as the case is. So like you rightly said, December, most times investors or the market is not really busy in that month. To be honest, you have just about 2 weeks in December. I think that we will really see I'm actually anticipating what is going to happen in January. Then we can know if there's going to be a lot of M&As that will happen. But I think in the next 2 weeks, by November, thereabout, there's going to be another MPC meeting. And we actually await to hear what the CBN will say in terms of the progress made in terms of how many banks have actually, met that threshold. So I'm actually looking forward to that, and that will actually tell us what we should be expecting from the first quarter of 2026, either there'll be M&A or not.
As of the 23rd of September, CBN actually stated that 14 banks had completed. So yes, we will wait to see what happens next. You've said that it's the regional banks, mostly regional banks, that are left. And I'm wondering, do they really have the option of downgrading their license? Do they? They don't?
So we have international banks, you have Nigerian banks, you have regional banks. So, well, not necessarily.
Yeah.
What you now have to do is probably M&As, that will be the last call. But one thing to mention is that the CBN has not, so this is actually very different from the last consolidation that happened in 2005.
Right.
That one was largely, M&A driven by the regulator. But this is more or less a financial stability. We need to improve the capital base, right? So for these regional banks, they have to really go out there to look for the capital. And it's actually quite interesting because now we have a lot of capital raising happening, so the insurance is also starting its own capital raise effort very soon, recapitalization. The pension too, there's also information and news around that as well. So the regional banks really have a lot of work to do in order to ensure that, they are able to attract the investors before the timeline. And if not, I think one thing we have to do is probably going to be the M&A as well.
Yeah, we know transition periods can be very complicated, especially when you're dealing with your customers. So how would you say some of the bank's managing stakeholders, how are they managing, communication and public trust and fear of maybe even jobless losses and forced mergers during this season?
So, I think the CBN has actually done a good job because now we have a lot of capital raising happening, so the insurance is also starting its own capital raise effort very soon, recapitalization. The pension too, there's also information and news around that as well. So the regional banks really have a lot of work to do in order to ensure that, they are able to attract the investors before the timeline. And if not, I think one thing we have to do is probably going to be the M&A as well.
Yeah,
Well, I think the banks have actually been doing good work. If you look at it, there's been a lot of communication from the banks itself to the public, trying to ensure that there's public confidence and there's public trust in the financial system. So also the regulator as well. Most of the banks, like I mentioned earlier, have actually explored the capital market approach. And for that, you need a lot of public disclosures in terms of the valuation, the pricing, how much do you intend to raise, is it in terms of rights issue, in terms of other public offer or strategic investment. All that information is made available because these banks are actually PLCs as well. So there's a need for them to disclose as much as possible from a regulatory point of view, and also in order to ensure that public confidence in the financial sector. If you look at it from the regulators, I think the regulators have also done a great job in stakeholder management, because what they've done is when they came up with this policy about 18 months ago thereabouts, they came up with the guidelines to say this is how we intend to go about it. And if you look at the 2-year time frame given, though people may argue it is short, but is it achievable? Yes. They've also given us multiple pathways, to achieve the recapitalization policy and threshold. And, from time to time, they've been giving us status updates as to, the progress of the recapitalization efforts. So I think there's a lot of stakeholder engagement from, both the players itself, that the banks, and also the regulators. And I know for sure that, at the commencement of this process, the CBN actually asked that all banks should submit how they intend to raise capital. And for those that are exploring M&As, I'm sure the CBN is actually going to work with them to ensure that, those M&As does not lead to, job losses or redundancy, because at the end of the day, that's not the aim of the recapitalization process. The aim is actually to increase the financial stability, increase access to capital, increase the financial capacity of the banks as well. So there's going to be a lot of work between the regulators and the bank in order to ensure that they achieve the objective without any negative repercussion, as the case may be.
And that's how this differs from the 2005 exercise that was driven M&A, but this is more consolidation of the financial system. Let's come to matters of financial inclusion while all this is going on. Would you say it's being expanded, especially in rural areas, or are we just leaving that for the fintechs and MFBs?
And I'm happy that you've mentioned the fintechs, because to be honest, I think the financial inclusion is actually driven by fintechs and the MFBs as a case. If you look at the last 3 to 5 years, you see the rise of major fintech giants, Flutterwave, PalmPay, MoneyPoint, OPay, as the cases. These are the people that are actually driving financial inclusion, trying to increase those, financial penetration, enlarge the basket of those that are now, having access to financial services as well. The major banks are actually doing quite a lot, but I think that, in my own opinion, they're doing catch up. But financial inclusion is actually driven by, the MFBs using technology, and now we're in the era of AI. All of this come into play, when you're trying to meet the underserved population. And what do this underserved population, what do they really want? They want quick access to financial services, either in terms of account opening, or either in terms of quick settlement, either in terms of KYC. And these are the values that the fintechs and the MFBs are bringing to the table. And this is how they're even having those competitive advantages, over the larger commercial banks that you have today. So financial inclusion is actually much driven by the fintechs. The larger players are also, taking some skin in the game, but largely driven by the fintechs and the MFBs.
And, while all of this is going on, how is this recapitalization exercise, how is it affecting interest rates, or being affected by interest rates? How is it affecting lending practices, the credit access for ordinary Nigerians and MSMEs?
Great. Well, so if I should go back to that question, there's an interest rate part of it. There's also the credit accessibility part of it, right? The recapitalization does not really have a direct impact on the interest rates, sort of. I think interest rate is largely driven by the regulators, MPC, outcome of the MPC, which is basically the reaction to what is going on in the macroeconomic environment. So take, for example, the inflation regime. When we had serious hyperinflation, we had the MPC, that CBN through the MPC had to, increase interest rates in order to curb, try to curb the inflation. But now when we have lower pressure on the purchasing power of Naira, inflation is coming down, we see that there are cuts in interest rates. So that is largely driven by, regulatory, what the regulators think in how to curb inflation as a cases. But coming down to access to credit, and I think that's where the big advantage is when it comes to the recapitalization. That's one of the major objectives, bringing that financial stability, bringing that accessibility of capital, ensuring there's financial capacity for the banks, to lend. So we're now in a regime where interest rate is coming down, which is good. We now have, hopefully, at the end of this capital exercise, we now have access to capital as well. So what it means is that Nigerians, the real sector, can now, approach the financial institutions and secure the required funding needed to scale up their business operations. And by so doing, they're also adding value to the market as well, adding value to the country as well. So at the end of the day, both sides complement each other. And I think it's a win-win situation at the end of the day, and a win-win for the CBN if they're able to really bring down the interest rates, one, then also achieve close to 100% success rate with the recapitalization, which means now that you have the capital and it's now affordable for those that really need it in order to scale up their business operations.
Indeed. And of course, the end goal is achieving real economic value and transformation. So beyond just the recapitalization exercise, what else do we need to pair with this from the government standpoint, from a regulatory standpoint, and all ends to make sure that we do achieve that real economic growth?
Yeah, and I think your question is spot on. It's not just the recapitalization exercise. It's all about, other complementary services that can be added to it. And in terms of what can the government do, like you rightly said, in terms from the fiscal regime, in terms of the regulatory regime as well. So if you look at it, there's still a lot of work that needs to be done when it comes to infrastructure. Infrastructure is one of the driving force of growth in an economy. So we need to be able to improve on the scale and stock of infrastructure in Nigeria. Then two, access to capital, is also very, very important as well. The government needs to do a lot. The security challenges, there's been a lot of news lately about how we need to improve our security, across Nigeria, not just in the northern Nigeria. All of this is quite important because this helps to improve investor confidence as well. It also helps to increase FDI. Then also ease of doing business is also quite, important. These are the other areas that the government needs to look into as well. The tax reform is a welcome opportunity, and effective from January 2026, we expect to see improvements, in the tax regime as well, and for both individuals and for corporates, also as well. So apart from the recapitalization, definitely there's meant to be a lot of work that needs to be done from a fiscal point of view, ease of doing business, infrastructure, security, as well as the regulatory point of view as well. So all of these complement each other in order to improve and grow the economy as we are targeting a $1 trillion economy.
Right. Associate Director, Financial Service Advisor, Andersen Nigeria, Mayowa Salami, thank you for your time.
Thank you for having me.